Okay, and we are live. Um, Let me just get the right. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Today is Friday, the 31st of May, and it's the first week since the approval of the Ethereum ETFs has been around in the market. So we can have a look at the effect it has had in the markets today, and also at everything else that's going on. As usual, we will fit crypto within the general economy because, let's say, crypto is not an island, so it will react to economic news the same thing as any other investable asset. So let me start by sharing my screen. Oh, by the way, before I even start showing you economic calendars and everything else, this week the big news of this week has been the conviction of Donald Trump. So and I'm not saying because I want to comment on that. You can all have your own mind on what's going on. But it's one of those things that's very difficult to understand the kind of effect that it might have, on the American public. So it's almost like it's a little bit of, a bomb that's thrown into the market, and we'll see how it will react. There's no way of telling exactly what the result would be. But some pushback there will be, and so just be wary of that as well, whatever you do. Let me start sharing my screen. Okay, so you should be seeing my screen now. So start with the economic calendar. It was a fairly light week from the point of view of news releases. So the main, I just comment on the main bits of news that we had. So we had the general consumer confidence is still, fairly high at this point of the cycle. I mean, the latest reading was 102. So any reading above 100 is basically expansion. Reading below 100 is contraction. So at the moment we're just about 1 month below, 1 month we're above. So we're just about even, which then reflects as well in the results that we see in the stock markets and so on. On Wednesday, we had inflation figures in Australia, a little bit higher than expected at 3.6%. So although the Central Bank of Australia said that they've pretty much ruled out any further increases in interest rates, but they have pushed back, let's see, any cuts for the foreseeable future. Different figure at the moment in Europe, with the biggest economy in Europe, the German economy, showing a lower inflation. Even these are month-to-month figures, but it is kind of account for what was expected at 0.2% and much lower than we had last month at 0.5. Going on Thursday, we had preliminary GDP figures, which again were pretty much in line with expectations. So a growth of 1.3% quarter on quarter, slightly higher than expected, but lower than last month. And we also had the usual job figures, which again just a little bit higher than expected, and we can maybe look at them. It's worth looking at them a little bit more granular level on here. Okay, what's happened? Okay, yesterday. Let's start again. Okay. There's a couple of things to consider. So these are normally the figures that get reported elsewhere are just these initial jobless claims, are the ones we saw on Forex Factory as well. Slightly higher than expected and higher than last month. This is probably more interesting to have a look at because this tells us how many people are actually unemployed. So these are, jobless claims that are continuing. So how many people are being unemployed? So the new unemployed go into these figures, and the people then find employment come off these figures. And these figures have been slightly trending up, in showing a kind of like slightly decrease of the health of the labor market. Although the figure was lower than expected, it was still higher than last month. So we continue in this trend. On the other thing to notice as well, that the growth rate of the GDP in the US has gone from 3.4% to 1.3%. This is quarter on quarter, okay? But it is along with expectation, but again, it's just another index of the slowing down of, that's happening gradually of the American economy. All right. The last thing, this is not important, it's not a red figure, but it's still worth noting that the mortgage rates are still haven't started coming down. So these are the 30-year mortgage rate, which was very low a couple of years ago. It's now over 7%. Okay, so this has an effect, as we saw last week, and we'll see. I'll show you that graph again in a second. But this is slowly having an effect on consumer spending, because as people have to renegotiate their mortgages at, maybe in some occasions like 3 or 4 times as much as what they had previously negotiated, obviously makes a big difference on their spending power. On today, we have probably the most important announcement of the week, which is, apart from the European aggregate of the inflation figures, we have the PCE price index. Okay, so this is another measure of inflation. So we have the CPI, which is the one that's reported all over the world. We have the PPI, which is inflation for the producers, and we've got this PCE, which is the favorite measure of inflation of the Fed. What they base the really is one of the things that they look at to set the interest rates. So it is expected to remain the same forecast, but there could be a slight surprise on the downside, especially when we look at yearly figures rather than the monthly figures. And the main reason, as we discussed last week, is that the housing figures that represents about 60% of this core PCE price index are basically 6 months lagging 6 months, and the real figures, the actual figures now in the markets are much lower than what is used to calculate this index. So over the next few months, it is expected to basically trend towards and even maybe below 2%. Okay, by the way, for those of you that they invest in the markets, the time to watch today, it's 8:30 a.m. in New York, okay, 1:30 p.m. in the UK, when these figures are released. Okay, and earlier there might be some volatility in euro-related product at 10 o'clock in a couple of hours, when again the CPI figures are released for Europe. Now, going to have a look at the what we were discussing.
Hello.
Last week.
Hello.
What we were discussing last week, it's the fact how reactive an economy is to changes in interest rates depend on the structure of its debt. And this graph on the left shows you what percentage of a country's mortgage market is represented by long-term fixed rates, and what percentage is then short-term fixed or variable rate. The red is variable, orange is short-term fixed, and blue is light blue is medium-term fixed, and dark blue is long-term fixed. Now you can see in the US, 96% of the mortgage market is long-term fixed. So this is like 10-year plus mortgage deals. Okay, so and most, a lot of property in the US is secured on 30-year mortgages. So for this to then start hitting people's in the pocket, it means that they have to get to the point where these long-term fixed deals need to be renegotiated. Okay, and this is happening slowly, and so we see it's been a very gradual effect in the US economy, where on the other side, if you look at the the figures from UK and above, the effect from in UK, Italy, Sweden, Ireland, Australia, Finland, in all these countries is felt a lot sooner, because like Finland and Australia, you use variable rate mostly for your mortgages, or short-term fixed that from the pandemic until now, pretty much most of those would have come to a renewal time and would have been renewed at a higher rate. So the effect on, I would say, these economies at the top will already have been felt, okay, in terms of growth, in terms of spending power, etc., where the US and at the bottom France, and in a smaller percentage as well Germany, are catching up with it at the moment as these long-term deals come to renewal. And if you see why hasn't the US consumer base actually slowed down that much, is because the debt service ratio is still, at the moment, at least these are the last figures that we had, is the second quarter of 2023. So we're still like 6 months, 9 months behind really with figures. But at the moment, we're still below the 20-year average in terms, on average, people spend like 15.7% of their income, as a country, to pay off debts. It's gone as high as 18% in 2007, and as you can see, it went as low as 13.5% in 2022. So you see why there was like a boom in the stock market in 2022, 2023, because people had, really in their pocket to spend. They had more money than they had over the last 20 years. Okay, now this is, as you can see, the incline of this. It's growing quite fast as people renegotiate their loans. So this is both people and companies. Okay, so a lot, as you know, inflation rates have been pretty much close to zero for a long time. So many people and companies would have secured their debts on long-term rates that are very low. But still, every day that goes past, there will be somebody that will need to renegotiate their loans, and so this is why we see now this steady increase going from 13.5% to 15% in less than a year, which is significant. And that means that in a few months' time, then we'll be in a position where it is actually biting quite hard, because it's more than people were used to. Okay, and again, I remind you, if you're living in Europe, in Australia, this probably has already happened. So you already have noticed that you have got, basically with the same income, you got less money to spend, or things are costing a lot more. In the US, this hasn't quite hit people in the pocket as yet. Obviously, in part, you might have anecdotal evidence that this in certain parts, or people that have been affected badly. Fine, that would be already a reality, but as an average, that still hasn't happened. The other thing to look at is that earning per shares have gone down to pretty much at zero or slightly negative at the moment. But at the same time, the stock market has kept going up, as we know, especially being pushed by technology stocks. Like recently, we've seen Nvidia reporting astonishing results and really, again, giving the stock market another lease of life. Because obviously people want to jump on results like this. But this is one thing to notice. So as I'm talking, I know that most of you are in one way or another are investors. Now, if you are a short-term investor, you will take certain decision expecting, returns on the short term, maybe a few weeks, maybe a few days, maybe a few months. But if you're a long-term investor, then there are things that you need to keep into consideration. So on this figure here, this shows you on average. So this is the PE ratio, okay, on this axis on the bottom, and this is where we are right now. We're about 20. We're about 26 PE ratio, and this tells you is like a projection of what the returns would be 10 years from now. Okay, so you can see the lower the cost, basically the PE ratio would basically tell you how much does it cost to buy a certain stocks in terms of expectations of a share of the profits in the future. So that will show you that at these kind of prices, in 10 years' time, you can expect to either have made no gain whatsoever or a small loss. Okay, at this price. And if it gets more expensive, they're almost guaranteed that in the next, from 10 years from now, if you buy at these prices, you will make a loss. It's almost statistically guaranteed. Okay, obviously, if there is a retracement and prices start pushing back, then it becomes, the more prices go back, the more attractive the long-term investment becomes. Okay, and so this is based on the S&P S&P figures. But it's very difficult to argue with numbers. Although these are things that you get statistically by looking back, at the same time, numbers don't lie. Okay, there is obviously, as you can see, there is like quite a variation that we can find, but these are like 80 years worth of figures. Okay, so bear in mind, if you're a buyer of stocks right now, that there isn't that kind of like boon expecting for things to go up forever. Okay, and any pullbacks may not be that temporary, but might be long term as well. Okay, so be very careful in your investment decisions, and don't let greed just be your guide when you're making these decisions, but kind of look further ahead and just trying to examine all the pros and cons of whatever you do and all the things that could happen that got high probability of happening, things that got low probability of happening. If you go with something that's beneficial to you and has got a high probability of happening, then it's very unlikely that you would suffer very much. If you go for the moonshot and with has got very low probability of happening, yeah, you could become incredibly rich if you pick the right thing, like winning the lottery. But at the same time, there's a much higher probability that you would be worse off in a few years' time. Okay, now, any questions about things that we discussed so far? I always talk about a lot of things, but it's difficult sometimes to remember. So if you have questions specific to something that I'm discussing, or a picture they're showing you, then ask me straight away so we can dig in a little bit deeper if you want. Okay, now let's go and have a look at Bitcoin. Okay, so nothing has really changed, and from where we were last week, so we were here on on Friday last week. And where are we now? Pretty much at the same point. Okay. And now we're not looking at the hours, but pretty much like this week has made no difference whatsoever. We're going up a little bit. We're going almost like tickling 71,000. We come down to 67 and we're now at 68.5. Okay, so no difference at the moment in terms of Bitcoin or the wider crypto market in general. Now, the Ethereum ETFs haven't started trading yet, and we don't even know a date when they will start trading. They're estimated to be in the market at least by the end of June. So maybe it could be, there's a slim possibility that they will be available towards middle to the 20th of June. But the probability are that they're probably going to start trading towards the end of June. So in actual flow terms, from ETFs, Ethereum ETFs, and we haven't seen anything yet, and that will come a lot later. In terms of Bitcoin, at the moment we are in this consolidation phase that we've been in since the 14th of March. As I said, that it's in itself, it's a good sign because it means that all the new transactions that are going on in Bitcoin are going on at these prices and not at the historical prices that are around the $30,000 mark. Okay, so any transaction that goes on just brings the average up of the last price that anybody has moved Bitcoin at, and those can be obviously they recorded and they can be found out on the blockchain, by everybody. So at the moment, there is kind of like this demand structure here that is still holding the price up. Okay, which goes from 67 to about 65.8, and price has been bouncing off it starting last Thursday and more recently Wednesday and Thursday as well. Okay, so we almost touched it on Tuesday, and then again on Wednesday, and then again on yesterday morning. So we've been bouncing off this 77,000 mark. At the same time, from the top, we are reacting to, both to this overall where there are a lot of the orders are. There's quite a few tens of millions sell orders at this level. And we can see here our price was rejected when just about touched the 72,000, but it also seems to be, this seems to be pushing lower as well. So there are positions still that are being taken, and we can see the effects of this in the chart quite clearly. Quite clearly that this is a supply area where there will be some pushbacks when we get to that point. So at the moment, the whole week, the whole of last week has been, as you can see, within this demand and this supply. So we've been dancing around up and down. We know clear direction. Okay, but if we zoom out, obviously, we can see where the direction of travel has been this year. So, and we look at this chart, this is only a 1 hour chart. So if we're going for this point here, which is when the ETFs were approved, so we had a pullback, which is almost like buy the rumor, sell the news. So, okay, this was the sell the news. Okay, and then things have started growing. They went back to the level of the ETFs launch, and then once they pushed back, they never really looked back. Okay, there was a pullback here, but then after that pullback, we've been steadily accumulating at higher price levels. Okay, so we had an impulse, correction, another impulse. Now we're going through another correction as well, and so expectations are that from here we will have, and maybe could be today during the PC announcements, there could be another, another pushback, another impulsive level. And you see what happens when there are these moves. So this is when this went from, I just want to time it for you. Okay. So up to here, everything was normal. Okay, 1 o'clock on Wednesday, 15th of May, 62.5. By midnight, it was 66.6. So $4,000 raise. What's 4,000 out of 60,000? Anybody can tell me? So it's definitely more than 5%. Probably about 6-7% around that figure. Okay, in a few hours. The same thing here. This is at 4 o'clock on Monday the 20th. We're at 67,000. At 1 o'clock in the morning, okay, in 10 hours roughly, that was 71 and 71.8. So that is like a $2,000 increase, which again, 2,000 out of 65,000 is still a significant, increase. I think it's probably around the 4% mark. No, sorry, what am I talking about? 7%. How can it be? What have I miscalculated? Oh, okay. I thought it was 69. Sorry, my eyes are faulting me. So it was 67 to 72. So 5,000 within 10 hours, again, 7%. Okay, so these things happen very, very quickly when they do happen. Okay, and we are getting in between. So there's a fast move, there's slow. So you can see it as well by the angle. Fast move up, then slow move sideways. Fast move up, slow move sideways again. Okay, and we have been sideways ever since. So we've had this big drop, and then we actually been, we've been moving sideways ever since. So Bitcoin hasn't really moved. What other things have moved instead in this time? So let's have a look at Ethereum. Okay, because what we said always is like buy the rumor, sell the news. Okay, so this is the announcement. Can you see? I mean, you can. I don't even need to go and check the day. So I know that this is when there were the rumors that the ETF would be approved. Okay, so this is actually Monday. So it was Wednesday when it actually was sorry, not Wednesday, Thursday evening, I think, when it was confirmed. So this is just the rumor, not even the announcement. Okay, this is I think is the announcements. Yeah, Thursday night. So this one here is the announcement, but this is the rumor of the announcement. Can you see what prices react to? Okay, so probably what we will see is that once the ETFs start trading, and we have moved again from 3,100 to almost 4,000. So this move has been, again, by the way, you couldn't have gotten this move, okay, unless you were in the know of Bloomberg or you knew somebody in the SEC, okay? But this is a 26% move. Again, let's say 25% in Monday to Thursday, so in 3 days. Okay, so it's just like unbelievable move. What is likely to happen once the Ethereum's ETFs, so whatever price does from now until the whenever they start being traded, which is probably going to be around the end of June, it's probably just going to be a consolidation. We might move slightly higher, but we are coming into an area of supply, which was the 2024 high. Let me see if we go back in time. This is where we had the all-time high in Ethereum. Okay, November 2021 at $4,864. Okay, but you see this slight steep drop. So we have a selling formation here, and not that I'm not saying that there are orders still left from from December of 2021, but definitely people pay attention to these things, especially when you see when we had a test of this area a few months afterwards, and again how that has dropped. Now we have we have actually gone beyond that, and we have tested also the area above. Okay, so within that wider area, this is where we had the previous drop from March until beginning of May. And now there is again, as we approach in that area, because people, I know that these are just numbers, it's just like squiggly lines and numbers for you and pictures. But what this means, okay, if you bought Ethereum at this price at $4,000, you would have lost, basically your account would have lost 30%. And you might not have sold it, and so you might still now have recovered most of it, but it's actually quite hard emotionally seeing your account dropping by 30%. So what this means is that what a lot of people do is that they're into this denial mode down here because I think, oh gosh, I'm nursing a huge loss, 30% of my investment down here. So what a lot of people do is that once prices go back to the levels where they bought it, where they now are break even, and they think, look, I just want to get out of this. Okay, I just want to get my money back and forget about it. And this is why you normally see that when prices reaches these levels again, we have another pushback, which we're seeing right now. What we are likely to do, probably, if there is enough strength, a buying strength before the ETFs are launched, we probably go sideways for a while. And then when the ETFs are launched, we're going to probably see a push down and to a level of demand normally, which can only see, I mean, this is the first one that we meet. Okay. So we could go down all the way to 3,100 before starting to see the effect of the capital inflows from the ETFs. In other things, the other things to look at is that a lot of the altcoins as well at the moment are not doing anything. Yes, Bitcoin is still close to the highs, Ethereum as well as at this thing, but most of the other projects are doing not much. And we can have a look at it here if we see at the look at the total. So if we see, this is the total market cap, excluding Bitcoin and Ethereum. Okay, so we're still following this kind of like a trend line that goes from when we hit the bottom of the market in December of 2022. But as you can see, we haven't really made a huge progress, especially since we had the Bitcoin top. It's been fairly similar. Where Ethereum has grown a lot, the altcoins haven't really done that much. So the market has been really sideways with a slight upwards incline since beginning of April, and it hasn't really started moving yet. So the thing is, normally things move in three cycles in crypto. Starting Bitcoin, it's generally the first mover. Then we have the big altcoin projects that move second. So projects like Solana and BNB and Cardano. All these projects move second, and then third we have the smaller altcoins. At the moment, both the second and third wave hasn't happened yet. Okay, so we are still there waiting for this breakout that could then take us to kind of something like this. Okay, so this is what it looks like. This is what the bull market looks like. Okay, and you can see the kind of the incline of the kind of vertiginous growth that this went from 130 billion in value to almost 1 trillion. And again, this is in less than 6 months. Okay, so this is, and by the way, this is not one coin, eh? This is the total crypto market cap, excluding Bitcoin and Ethereum. So you see the why we're saying, oh, these haven't started yet. You should think, you can tell me, yes, but look at this, from January to now, we've already grown quite a lot, by 50%. But yeah, 50% or 800, there's quite a big difference. Okay, so we haven't seen any of this yet. So we'll wait and see what that can look like. But I've got a couple of things to show you as well. A couple of oh, sorry, not this one. A couple of screenshots. What things may look like. First of all, we carry on seeing similarities of things that went on during previous bull cycles and the current one. So this is comparing the 2016 and 17 beginning of the bull cycle with the present one. So this is the level at pretty much where the market paused when it reached the previous all-time high. So the previous all-time high in this case was from 2014. We got to that point in beginning of 2017, and you can see. So this is quite kind of something like a little tip. Sometimes when you see the price action and the oscillators, whatever oscillator you use to indicate momentum, if you use one, when you see them going in the opposite direction, so you see kind of like a divergence, so price is making new high, like in this case, while the oscillator is making lower highs. So there is a breakout then that is due to happen, and it's the same kind of structure we're seeing right now. So as you can see, like Bitcoin is making new highs in price, where the oscillator is actually making lower highs, lower lows. Okay, so that may be indicating generally a breakout, which can happen, by the way, in either direction. And this is also, again, the consolidation that we're seeing right now, and kind of like what happened in the previous two cycles. So the days of accumulation at the moment are still within the range. It was a lot shorter in 2015-16 before the new high. It was about 450 days. The last one was 720. The current one is about 650 days of accumulation. Now, if you can see these figures, by the way, this is the altcoin market. Okay, and can you see how how he grew? I mean, in this case, I mean, this is what really the early days of altcoins went from roughly about 75-80 million to about 250. And then in this case here went from, roughly 25, 30 billion to almost like 1 trillion in the previous case. So it can be some quite dramatic moves happening. Sorry, the first I've misread the first set of numbers. So this went from about 75 million to more than 100 billion. Okay, so this is a more than 100 plus in the altcoin growth. But at that time there were very few around. Okay, if you remember in the early days, this is more impressive because it was already a much more mature market, and again, it went up about 30 times. What will happen this time? What will happen this time? So this time, obviously, we start from much higher point. We're already pretty much at 500 million, but thinking that the total market cap in the previous cycle went up to about 3 trillion. Where could this get us in the current bull market? So if we go from 500 million to maybe, let's say 2 trillion. So without expecting the same sort of growth that we've had last time, but keeping, let's say, as the market gets more adult, so to speak, then obviously these big jumps in valuation will become smaller and smaller. But still, we are looking from, at a 30-time growth last time. You can make whatever expectations you want, but I will say that maybe 4 or 5, it's fairly probable that it will happen. Then apply that to some of the smaller coins that had the example in the previous cycles to grow for hundreds of times. We could see some very interesting times ahead in the next 12 months. So any questions about this? Okay, there are no questions. I will move on.
Luca,
Yeah.
I have a question. Morning, everybody. Just what kind of timing are we talking about? And then also, I guess the question is, what kind of growth percentages are you predicting? I mean, it looks, if you compare those three graphs, it looks like the jump the second time was a lot smaller than the first one. Should we see a similar correlation? Is in that the market is pretty much matured and it's going to be more of a correction up as opposed to a massive jump? And then, my question around timing.
Yeah, no, it's in terms of timing, we just follow the Bitcoin cycle. So the timing should be fairly close to what we had in the past. Whether it starts, next month or whether it starts in 2 or 3 months, we're still within 60 days, really. So 2 months of the previous accumulation phase. So we are looking at this cycle to start very shortly. In the next, I would say by October at the latest, we should have seen the first moves well beyond the current all-time high. In terms of how long forward, how long will it last? I mean, nobody knows. I mean, I don't have a crystal ball. I'll say again, looking at the previous cycles, we are looking anything between a year and 18 months. But that's just a guess based on past performance. Like all markets. So this is a normal graph for a growth of a pioneering, like a new product. Obviously, beginning it starts, the valuation is very low because nobody knows it. Then as it starts getting more known, you get this fast growing phase. And then obviously we are linked to the 4-year cycle in Bitcoin. So the next move up wasn't as strong as this one, but we're still talking about 30 times, 30 times growth. So if you can expect something smaller, even just cut it by 10, 3 times growth from where we are now wouldn't be, would take the whole market to, at the very least, double where we are now. But it's just a guesswork at the moment, because the things that we are seeing in the market sometimes defy logic and belief. But what I expect, because of the use of blockchain technologies becoming more like day to day, so there will be a lot more cases where this technology is used in products that you buy at the on Amazon or the supermarkets than there was before. So we will see a maturity, and so a lot more users coming onto these kind of investments. Now, what that causes, first of all, is that it stops a lot of these wild fluctuations, because the more volume there is, then the more liquid, so the most flowing the charts are, in a way, because they're always at any price level, they're always buyers and sellers. But obviously, as the market gets bigger, the volatility as well gets smaller, and I think the expectations of growth from now on, pretty much I base my expectation not so much on just a chart, but I'll try to look at the use cases. What could we use this for? What could we use blockchain for? And what difference would it make? How many new users would it bring? So can you imagine, for example, if the next elections in the US, 350 million people in the US, I think, pretty much roughly, if they used a blockchain for their voting, so that would be the first time that 350 million people get, or at least, those that they have never touched crypto before, those will probably be the first time that they will do anything connected to the blockchain. And it will be like actions like these when people think, oh, is this what Bitcoin does? They will ask those silly questions. And we have seen now that since the launch of the ETFs, we have seen in the news, in the advertising, especially from the ETF providers, kind of really the kind of educations about Bitcoin that should have been done 10 years ago. So they're explaining in very simple terms what this technology does. And as people get more used to doing simple things with using blockchain, then that bring a wave of new users, because the next wave will bring, at the moment we have about 5% of the world population that uses blockchain technology. I think in this cycle we could get from 5% to about 15, 20% quite easily. That would mean like trebling, quadrupling at the very least the number of users that are using this technology. And remember where we were comparing this to the internet. We are still we got a similar growth and faster than the internet of the early days. So we are close to the let's say being in 1997, 1998, if we have to compare this to what happened with internet adoption. So I would say the sky is the limit. I couldn't put a price on where we will be in 12 months' time. It's just like observing, as usual, the market and trying to get the signals for when we are topping out. Okay. So a few more news. The one thing that we have to be aware of is that this FIT21 crypto bill, which is very important. So this could get past the Senate, and the reason why this is important is because it's really doing what we expected the legislators to do. So they're pretty much putting the SEC firmly in its place, stopping the overreach of the SEC, and basically paving the way for cryptocurrencies to be considered as commodities rather than securities. And also connected with that as well would be preventing the use of CBDCs that may be used in the future from impinging on the freedom to privacy that is enshrined in the US Constitution. So this is a very, very important things that are going on, behind the scenes, but that can have a big effect on the cryptocurrency market, because the US is still the biggest market in the world for cryptocurrencies, even with all the limitations that we have in the US right now. You can see in the price action that always happens during the US hours, more than doing the Asian or the European session. So hopefully it's something that can be passed, because it's not a partisan legislation. It could have people voting for it from both party, and we'll see if this manages to get through. But it would stop the SEC from keep trying to do what they're not supposed to do, which is legislating rather than applying the current laws. And this is, regarding that, this is the also is this dismissal of the SEC case against Debbox. They got wrapped on the knuckles quite hard in terms of they've been accused of overreach, and trying to make up the rules without telling people that they've broken rules that didn't exist. And just basically they've been told that look, you're making these things up as you go along. If you haven't even defined what a security is, how can you accuse people of breaking your security legislation, which you can't accuse something of breaking something that you haven't defined clearly. So all these things, this is a small case in terms of crypto, much smaller than the case against whatever FTX and Binance and everybody else that the SEC is XRP, everybody else that they are they got a case against. But still, it will make a big impact because it starts creating a precedent, and if they have failed in this case, they can now see as if they approach a similar situation, they might fail again and again. Okay, so this is in a way, the events are shaping this legislation that will come through, and we still don't know yet how how the market will see this, and especially how the legislators and President Biden, how their approach to cryptocurrency will be. But at the moment, I would say the signs are pointing in the right direction. And what happens, and we'll see. So this is still about this, and what else do we have? Oh, and these are basically the Ethereum ETFs are carrying on. The both Grayscale and BlackRock have produced these amendments. There's the next step in having a tradable product. So they're going through the process. I said that should take about roughly about a month, taking us towards the end of June. But pretty much it's everything going as expected. So we could see as early as mid-June in the best case scenario, but we still got at the very least a couple of weeks of wait time before that happens. If we go and look at the ETFs, so this is, first of all, let me just have a look at what the what we see. There is a strong support around 67,000 at the moment. The orders are pretty much there isn't a lot of there aren't a lot of orders pulled above it. There is probably the biggest chunk of orders is about 71 and a half. We've got about 300 million orders on that liquidations going on at that level, but we're still within this price range. It's quite light between where we are now and that level. Let's see the kind of on shorter time frame orders, there is again a barrier around 70,000, but that's much smaller, about 30 million orders resting there rather than 300. In terms of ETFs, let's see the flows. So we carry on seeing positive inflows, although they're quite small compared to the past. We had about roughly 30, 45, 50 million dollars in the past few days. We still see outflows from GBTC and inflows pretty much for everybody else. And now can you see we are very close now. BlackRock is about to take over the lead in terms of the largest holder of Bitcoin, and there's only kind of like a couple of thousand Bitcoin difference between the two. But the interesting thing is that this number keeps going up. Okay, so this is the total new money in Bitcoin ETFs. So this is the net figure from January. Okay, so we had $13.8 billion from January. So the Hong Kong ETF in comparison is tiny. So you can see there isn't really much activity going on right now. The total in US dollars, the total is about 230 million since the end of April, beginning of May. So the small numbers, and it's a tiny of the of the size that we see in the US. Unless, and this is not likely to change very much unless these are accepted for trading in China. If that was to happen, then we will see much bigger numbers. But at the moment they're not. So I think we covered most of everything. The other thing that we can have a look at is funding rates. So at the moment, the funding rates now are in the cool zone, which means that you can, if you were to borrow, let's say, any of these items, you wouldn't pay very much. So 11% a year, 11, 13, 14, 13. So we are very much washed out all the long positions that we had before, and now we are starting, basically we reset. Once these charts starts going orange, and you can see the difference. So in May last week, if you wanted to go long on Pepe, for example, 1,000 Pepe, I don't know what that is either, would be another meme coin probably, it would have cost you 85% a year. Okay, so this is the kind of, when the market is overheated, it becomes also very expensive to trade on margin, because these are the rates that you'll be paying. So if you wanted to keep these coins, I know that most people use it for very, very short term, but if you wanted to keep this coin for a year, you would have to see a profit. You would have to see a price increase of more than 85%, 85.1%. Okay, but at the moment the prices are very low. The point that some of these coins are actually in negative territory. So in certain cases you even are paid for going long. It doesn't last very long no more. It's not a strategy that will work generally, and there's a reason why. There's a reason why it is negative, because obviously nobody wants to buy them. Okay, I think we're done now. So let me stop sharing and see if there are any questions. Chad, I would value high probability thoughts. What are you referring to? So you muted. Oh, I can't hear you. I'll really see if you're not muted.
Sorry, is that better?
Yeah, we can hear you now.
Good morning, everybody. A bit earlier, you did mention it's probably a good idea to have a look at what's highly probable for the coming year or two in terms of investments. Don't obviously worry about stuff topping out. Be wonderful to have that conversation sometime. So, for example, we know interest rates in the States are likely to come down. That's one opportunity. Crypto, as you pointed out, is another opportunity. And our inverse funds an opportunity.
Yeah, we can have a look. Definitely, we can have a look. If you remind me next week, we can have a chat about that. And
Cool.
there are opportunities. There are cyclical opportunities. So I think we all make a mistake sometimes, just trying to jump on the bandwagon, whatever is hot at the moment. But there is sometimes there are much better opportunities if in taking the waves as they happen. In a way, like is what Warren Buffett does. He knows what he wants to buy and just wait for price to get to his price before he buys. It's not any different in what we could do ourselves in a small thing, just seeing. So in a way, especially if you're looking at macro for investing, is you need to understand what the consensus is, and also trying to get an idea where that might be wrong. Because if you can then get a, like a position which is against consensus, that will mean it will be a lot cheaper than normal.
Yeah.
And those are the the points where you make good investment decisions for the future for me. So we can talk about that next time and see what are the industries that are possibly better to get a position in right now. But the one thing that I keep looking at every week, man, I'm thinking at the moment the stocks are so overpriced in the US. I keep going up all the time, but it's scary because I can see that there is going to be a repricing going on because the price is also a multiplier of the earnings that the company are making. So apart from a very few companies that are doing really well, like Nvidia, like some of the technology companies, everybody else is struggling, and the earnings are at best flat, if not negative. So what that will mean is that you are buying shares at an incredible multiplier. So it will take you, if you think about it as money that you put down, as if you were buying a house and you're just holding it to get your money back. It might take you now, years and years to get that money back in terms of dividends that you receive from the companies. And if the return is not that great, because most people invest, especially in the stock market in the US, is more like for capital gain than not, dividends. If the capital gains are not there long term, what are you buying? The dividends are not there, the capital gains are not there. So then why are you piling on? So it's just a very, very small term like trading decisions rather than investing decision. And that's what worries me in terms of being overexposed to the stock market right now.
Yeah, that'll be a fascinating chat. Thank you.
Yeah. Hey, Stan, you heading off to see Roma versus AC Milan? AC Milan is my team. Excellent. Say hello to everybody. Fantastic. You have to wear a black and red t-shirt, okay? No yellow, in it at all whatsoever. Okay. So Roma's kind of red and yellow, Milan are black and red. Anyway, that would be good fun. Although I know that all the best players will be off for the European Championship probably, but they'll still got they got enough players in there to give you some good time. So yeah, I'm jealous. Enjoy. Okay, guys. Any other questions before we go? I'll remind you that
Just
Jonathan.
a big thank you as always, Luca. Thank you.
That's all right. You're very welcome, Kerry. I just remind you, Jonathan has posted the link for the for his Cardano event going on pretty much as this ends. So if you haven't been before, I would encourage you to follow it because it's a wealth of information and also practical as well information on how to interact with the Cardano blockchain too. And maybe on occasion there are opportunities as well that you can join if there is something really interesting launching on Cardano. And that's very Cardano centric, but it's a reality of how blockchains work, and there is so much going on now, Jonathan, especially with the governance. Cardano will become the most decentralized blockchain of all by the end of the year. And there will be elections and a constitution in place and everything else. So really exciting times.
Yeah, it's getting very close to revolutionary change, completely owned by the community. It's getting exciting.
Yeah. So if you want to know more, then please, just click on the link in the chat box, the one that starts with Fluid 7. And yeah, I will see you. I will see you again next week, and remind me so we can have a conversation about the general assets and how to maybe position ourselves for long-term investing. Okay, all right. Goodbye, everyone. Have a great weekend, and I will see you all soon.